Okay, good afternoon, ladies and gentlemen. Just back with another weekly forecast. Again, we're now utilizing the TVT principles, being very clear and transparent in regards to what we are analyzing, assessing, and reviewing in terms of key levels, areas of interest, supply and demand, and imbalances. We'll start again from the top down scenario. Just on basic price action, we can see that the market is still on a bearish trend. We have seen, as we have been anticipating, the markets come back down close to COVID lows from a couple of years ago. However, we can see the rejection that has occurred this month has not actually taken 50% of that level, and therefore it's a clear indication from experience and know-how that it's a very strong sign that the market still has to come back down, liquidate 50% of this level, and then move off. So unfortunately, it does look like there is still some bearish potential down even after the rejection that we're seeing from this month that is kind of still materializing. As we drop down onto the daily time frame, we can see that the market has rejected out of the bearish imbalance that we kind of marked up from last week. I believe it was a 61.0 bullish imbalance. Beautifully taken that, and then it created a move of approximately 140 odd pips on the reversal and bounce from that level back up into the inefficiency that kind of resulted from the bearish liquidity grab that we saw down to that bullish imbalance. The market now obviously is rejected out of this level. Sellers were obviously holding price further up here. Our supply was marked up at this point here as well. We'll get into that in a minute. However, it seems as though the inefficiency that was resulting from this liquidity push with volume down into the areas of lows has actually been respected now, and it's consolidating over the remainder of the week. As we get down onto the lower time frame, we'll turn on some areas of interest. So we've got supply, we've got demand, and we've got key levels as well. The key levels are going to start driving you a little bit crazy at this point, but don't worry, we'll get down onto lower time frames and kind of see exactly what we're looking at. However, what we can see is we're still currently sitting in between higher time frame demand, which is below us, and higher time frame supply, which has been respected with the move that was kind of taken down to the low side and then rejected above the demand that we were marking up on the higher time frame. So clearly we're in an area of consolidation. As we get down onto the 1 hour, we can see then areas of interest that we're looking at start to materialize. So we had the rejection out of this level, which was the bullish imbalance, straight up into the inefficiency and liquidity that was left above with this rejection. So we've got bearish imbalance above us on the higher time frame, which was respected and not then taken by this bullish push, which shows that there still possibly is an ability for the market to kind of come into lower time frame imbalances or the higher time frame imbalance to then reject down deeper into levels of demand below. So as I said, we're currently sitting between two areas of higher time frame demand and supply. On the lower time frame, which is the hourly time frame that we're looking at now, we can see here as well that there are areas of interest that we can actually look for short-term moves. So the rejection from the highs, we can see a bearish imbalance that was formed at this point, which has been respected as the market continued to consolidate. And we've got an area of bullish imbalance below us here. Now, this is on the lower time frame. Below that and above that as well, we also have areas of higher time frame interest, which is the weekly POC, which is very close to the daily POC from the 16th and 17th of June as well. And above us, we've got areas of liquidity lying up here with the equal highs from the rejection of the highs that we spoke about. And we've got the higher time frame bearish imbalance that created the big push to the downside. However, that also is very close to the weekly POC and daily POC from 2 weeks prior. So we do have an area that the market could come into to kind of reject down out of to then respect either the bullish imbalance at this point or break this bullish imbalance to then test areas below to then create a rally to the upside again to take liquidity and target the higher time frame imbalance for the bearish side. Again, it shows that the market is consolidating over the past few days, which means pooling of liquidity on both sides, which we can clearly see. We've got liquidity above, we've got liquidity below, and it's just a case of waiting and sitting on your hands to see how the market reacts to these levels and confirms a move either way. So as we said before, we're not looking for home runs every single time we trade. When we trade out of a bullish imbalance here, our target should always be the closest bearish imbalance, because that is where the market has already determined and defined for us that it wants to kind of see a reaction for something. So safe TPs are always a good bet. And even on this basis, the move from the bullish imbalance here to the bearish imbalance is 170 odd pips. So it's not a bad trade, but you know, long-term holds, intraday, few days, 2-3 days, a weekly hold would possibly be up to the bearish imbalance. And we don't want to try and reach past that because there's no telling what the market would decide to do. These are all safe levels that we've marked up off the lower time frame imbalances, and they're good targets for TPs, either for bullish or bearish trades. So don't try and obviously trade past these levels, because this is where the market has told you there is an influence, there is a reaction to be had, and you don't want to kind of be on the wrong side of it. I'm going to try and keep it as short as I can. There is a lot of content in this forecast. A lot of levels have been marked up. Again, if you don't understand it, go back through the course, the intermediate and the advanced course, and you're always welcome to send messages on YouTube in the comment section, or message us on Instagram as well, and we'll be happy to kind of answer any questions that you have. But as we get through the weeks, the Discord will kind of start to take up a lot more numbers, and we may well then start to obviously release a weekly or a monthly video to kind of explain trade analysis on a daily basis and execution of trades, and explaining why the analysis was done in the way that it was, and the execution resulted in a profitable trade being taken. Okay, as with everything, wait for the setup. Don't trade unless you see the criteria being met and the confirmations presenting themselves in terms of bearish imbalance being broken by a bullish move, and then a retest of the zone with low volume as per the intermediate course. And if you've gotten to the advanced course, wait for that confirmation of drop in volume to show on the footprint chart before you take the trade. Otherwise, you will come up with an error message, which will be that you haven't fulfilled the requirements of the course, and when you do so, it will always hit your SL. So we've stipulated a very clear cut strategy that needs to be followed in steps to be able to be profitable in your execution of trades. And if you don't follow it, you're only going to end up hitting your SL. And that's where the error will occur. So if you try and skip a step in a mathematical equation that has logic to it, you're going to end up with a false negative at the end. And if you try and skip the steps that we've set out in the strategy and don't follow it according to how it's been explained, you'll end up with an error message and it will hit your SL. If you're struggling to find tight SLs or tight stop losses with entries and executions, then my advice would be to increase your SL to a 5 pip or even a 10 pip SL, and take a trade as a 1-to-1 R for the time being until you get comfortable with your execution criteria, to show you that the strategy actually is profitable. It may just mean that you need that extra breathing space on your SL from when you're executing the trade to allow you to kind of see that it is the correct type of implementation, but maybe the exact point of execution is not correct according to the footprint. So that's something that will come with time. You'll need to do a lot of analysis and backtesting to kind of get very, very good at that, and to get to the tight SLs. It's not always possible to get a 3 pip SL, and this is why we're quite picky with our trades. And the ones that we do take have to meet the criteria, and that's why the profitability ratio that we have of our trades is very, very high, in the very, very high 80s and 90% range. Trade safe, be safe, spend time on the course content, delve into it, backtest it, ask questions on the YouTube comments, Instagram, message us. We're more than approachable and happy to answer any questions that you have. The content's been put out there for free for a reason, and obviously there is ongoing support for that. We understand that it's not going to be easily understandable to everybody, and questions that are presented to us we will answer to the best of our abilities when they get made. Okay, take care guys, take care, bye.